Hello. Mic test, mic test. Hello, guys. Welcome to the 44th edition of the Trading Opportunities webinar. This is Nirav, and good morning, good evening to you guys based on the time zones you are in. So, what I'm going to do now is just load up a few more screens before we actually begin. The reason being very simple that I just want to have a few more minutes before or seconds before everybody joins in. Hello, Antoine. Some issue echoes sonor. Let me see. Hello. Let me see at my end. 1 second. Hello, Antoine. Some issue echoes sonor. Let me see. Oh, it looks good at my end. Hello, Charles. Yes, I am doing well. Thanks for asking. How are you? And yes, is there some issue with the audio? As Antoine is telling me. Can you check and kindly let me know? Philippe Calphone, good morning. Philippe is saying sound is okay. Thank you for letting me know that, Philippe. So now it looks like, Antoine, can you just refresh the browser once and hopefully that should be able to, or that should resolve the issue, I think. So guys, all is okay now. Thank you, Antoine. Thanks for letting me know. Thanks for sharing your wisdom with us once again. Charles is saying, thank you very much, Charles, for that nice comment. Okay, guys. So in that case, since everything is looking nice and well now, let's start off very quickly. I'll just go over with the legal disclaimer here on screen, suggesting that all content presented here is pure educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purposes, then you yourselves will be liable for your profit, for your loss, or your loss of profit, or any other situation arising from you using the views presented here. And rest of the content in the disclaimer, kindly do read it at your end. By the way, more people who are joining in the chat, stop by and say hi, right? Don't just sit there silently. Stock Hero saying good top of the day, everyone. Good morning to you as well. Charles, right? Charlie, let me just check. Charles Flower. Okay, so we are now done with the legalities here. So now let's just proceed with the very quick introduction, or as quick as I can make it. So as you guys already know, my name is Nirav Yadav. I'm the admin and owner of the website 50eyes.com and the YouTube channel 50eyes Market Analysis, where we are currently broadcasting this webinar live and on a couple other platforms as well. Right? And we do this webinar every Monday, Wednesday, and Friday. The time is always 2 p.m. GMT. So if you want to join in and ask something regarding the charts we discuss, you have to join in live at this time. I'm also the author of the book Think with the Market, Secrets to Achieve 80% plus accuracy using Elliott Waves. By the way, if you are already familiar with what Elliott Wave is, you should read this book, as it is written for intermediate to advanced audience, and make sure you leave a review after you have done reading with it. And lastly, there is the quick forecast accuracy, which I like to show off before we actually begin with the actual content. Generally, in this industry, the accuracy of even 60% is considered very high, and I have 6 consecutive years of 80% plus, reaching as high as 90. You can check it by visiting this link 50eyes.com/forecast accuracy and scrolling down this Google spreadsheet and find the instrument name, the date of discussion, the actual analysis, and the video link to verify what I said. What happened or did not happen is written over here in the outcome section. You can see 2021, I had an accuracy of 80.22%, 2020, 88.52%, 2019 84.88, 2018 84.61. You can of course scroll down and check everything else in detail. 2017 87.50 and 2016 83.34. Right. With that, let's now head over to the actual webinar. Charles is saying I was busy sharing on other groups. Thank you, Charles, for the very kind effort. And yes, guys, I shouldn't say it at the beginning of the webinar, but we still are lacking a lot in the participation numbers. The number of participations is still very low for the quality of the content that we have here. So your efforts, just like Charles' effort here, are more than welcome and required at this point. I will appreciate it very much if you can share whatever we are doing here in your circles. Okay, so now let's head over with our first discussion, which is the chart of Euro USD. Right, you can type in your questions if you have any after I have discussed a little bit about it, because most likely by the time I'm done with the discussion, most of the doubts should be clear, if not all. And afterwards, I'll just answer the doubts. So let's now begin with the actual content. Euro USD, as we have already discussed last webinar, I was short on this counter, and my view was that above this line, this purple line, I would look to exit, and more specifically this box. But what happened later on was that I exited this position and entered S&P positions in loss. Of course, I exited this one in loss because the shorts were clearly not working out, right? And since we had already discussed the exit levels, I guess if you were in, you would have also been able to exit. Now, what is happening right now is more important. So what is happening right now is that we have two views here. First of all, from this point of reference, around the price level of 1.0340. First view is that A down, B up, and C down correction. Right. If that is the case, then once this is complete, we should now start heading higher, and we should very soon see the market within this last known important resistance level, which is anywhere between, actually, if I draw it correctly, it is starting around, roughly speaking, 1.07743 and going as high as 1.0933. Right. So what we expect is, if this correction is complete as an ABC here, then we should see the market within this zone. And of course, keep in mind the data feed we are using is this, and you may have a different data feed leading to a little bit different price. So check or look for the actual resistance level. I am drawing using this congestion zone instead of the actual price levels. So long story short, we expect if this correction is complete, the market moves there. If not, there is a second hypothesis or a second possibility, which is suggesting that this market might still be continuing downwards, right? Basically, what I'm saying is a nested 1-2-1-2 formation to the downward direction. Those of you not much familiar with Elliott Wave, this is what an impulse looks like in this box. The first leg down, the second leg up, third leg down, fourth up, and fifth down. Now within this formation, if we magnify this third leg down, because see, one wave and wave two we have already completed, wave one and wave two we have already completed. So if we look for this third wave down, then we will soon realize that it itself, if we magnify it, it itself will have 5 waves inside of it. It itself will have 5 waves inside of it, right? And because it has 5 waves inside of it, that is exactly why we are labeling this particular part as Roman 1, Roman 2, and then it should be followed by a Roman 3, right? So this is the bearish hypothesis, and the bullish one I have already discussed. Now the thing is, if this is the bullish hypothesis which is followed, then the market should continue going up, and technically we can enter along with the stop loss around this low, which is around 1.05639. But keep in mind, the actual technical stop loss should be near the low. Personally, when I am trading and if I'm interested in long, I will put it here. But technically speaking, from a Elliott Wave perspective or purely theoretical standpoint, it is near the last low. Now, more interesting is the setup for the bearish side, right? Because if the bearish side is still underway, then the new leg down, as we just mentioned, will be the wave 3 of Roman degree, right? So wave 3 of Roman degree obviously means a bigger move than possibly these two legs or the current movement down. Again, I'm saying it's a possibility. There is no certainty of it, but a bigger move than the already downward movement which we have seen can be seen on this counter. And how will we capture it? Actually, in this particular case, the break of this low or the recent last low would also be the trigger for the new wave 3 down, right? Unless, of course, it is doing something completely else, and we will have to see it at that point in time. But for now, as I just said, the last low is crucial. So if the market goes below this price of around 1.05440, then we will be interested in possible sell-off or possible shorting opportunities. So that's the interpretation so far. Bearish side below this level, we will look for bearish activity. If you are bullish, then below this level, we will exit the longs. Right. And as far as I'm concerned, I currently don't have any position on this counter because our EURCAD trade is working out, which we'll discuss right after this one. Right. So if there is any doubts on this one, just let me know. Otherwise, we'll move over to the next chart of EURCAD, which is a currently running trade I am in. By the way, if you don't have any doubts, please do type in understood, clear, or something of the sort. To make sure to, okay, there it is. Philip Calfron saying clear. Thank you, Philip, for the confirmation. Fraser. Hello, how are you doing, Fraser? Okay, so in that case, now that everybody is on the same page, let's head over to our next chart, EURCAD. So in the chart of EURCAD, as we discussed very much clearly the last time, that we are thinking that, or we were expecting that this market will give one leg up, right? So why we were thinking this market would go one leg up is that we had a leading diagonal here, which we had already spotted, then a wave 2, and very clearly mentioning wave 2, we did not know if the wave 2 was complete or if the wave 2 was going to go sideways and then go like down, right? So long story short, there was a possibility that the wave 2 might still go lower and end within the price range of 1.43172. However, that does not seem to have happened at all on this counter. And because that does not seem to have happened, we are already long, right? Because the other trigger was that partial entries. One second, this one is not required. So Philippe Kalfan is saying EURCAD, nice setup, and thanks, I entered longs. That's nice to know, Philippe, and thank you for letting our viewers know that. Right. So yeah, as I was saying, that we had this setup caught up already, and there was a possibility that it might give one more leg down first before going up. But once it crossed the high above this lie, this one high, this high, 1.44818 in live market, I was checking it out, and when it was somewhere here, not exactly crossing it, I realized it is most likely going to cross it, so I entered longs, right? So that's how I entered this position, right? And again, we have already discussed this long setup. The idea was that for those interested in adding swing longs could add partial longs, and later on, once we have the confirmation, they can enter complete longs. But anywho's, in live market, I was able to analyze and get entries around here. What's the take currently? Let's just quickly check that. Actually, one second, let me just check this. I think this wave 2 may have a requirement to be placed at a location somewhere either here or here. Both are actually valid. Okay, so this is our expected progression. There is one thing here to note, that it is also possible that the 1 is here and the 2 is here, although it looks odd. And in that case, 1, 2, 3, 4, 5, that is small upward movement can be seen. And why I'm pointing it is because although we are seeing this as a diagonal, as a 1, 2, it is also possible that it is an A, B, and this is just a C. So I'm just talking about the conservative view where the upward movement is limited. In that case, the movement should be A up, B down, and then C up, right? In which case, this small down leg and then the new up leg should be the end of the whole move, right? So based on that, we need to manage our positions, because still, since we are running in profits already, we need to ensure that we at least secure something out of those profits, right? Of course, the market can reverse and everything can happen or anything can happen. But what we need to ensure is that we get out not in loss, at least little bit above break even. That's what I'm saying. So for that, we need to discuss the bearish scenario, which I have just discussed: the A up, the B down, and C up. So the B down and C up. And as I just said, even in that case, we have small correction and then one more leg up remaining. So you can just manage the positions accordingly. I think this much is enough clue of how to secure your profits. And if you don't want to get into the analysis, or if you don't have the skills to analyze it on a lower time frame and whatnot, then just trail your, what do you call, stop losses above above your entry, right? So long story short, this is the conservative outlook, and if the actual count performs, then this market should, as I said earlier, take out the last high above 1.46432, right? So if that happens, then well and good. If that doesn't happen, as I said, we will already secure our profits. So that's about it for EURCAD. Long trade already working out. I'll just call it a +1. And let me see the tally which we have so far. I think we have 47 trades which worked in the last webinar. Yeah, 47 trades till the last webinar. So last to last webinar, sorry. So with this one in picture, we have 48 trades that have worked in the last 43 webinars so far, which I believe is a pretty good number. Let me know, guys, if you have any particular or specific question or doubt regarding this counter. If not, please do make sure to type in clear or understood in the comment section. And we will move over to the chart of USDJPY. Thank you, Charles, for the confirmation. Thank you, Fraser and Philippe. Let's head over to the next chart. And by the way, let me practice what I preach and actually move my stop losses above my entry. Right now, they are pretty far below. At least above the entry is important. Okay, done. So now at least I've ensured that I won't be ending up in losses no matter what happens. Unless there's a strong move with a gap down and whatnot. USDJPY, here it is. It did trigger the shorts, or the at least the alert for the shorts, but I have not taken any entry because I was waiting for sort of establishment below the channel. And let's first discuss what is the actual setup before actually discussing the trade and why I did not take it thus far. So actual setup was that from this point of reference, which is the price level around 129.839, we were expecting that this market is heading for an A up, a B down, and a C up. In this particular count, if the A up, B down, and C up is the correct count, then this trend line, once broken, should give us a possible sell. Now, break of a trend line does not mean that the price going below it is a break, although it is a break technically speaking. What I mean specifically is that it should go lower than the trend line, either by a significant level, or it should go lower and then correct, like that is test back the trend line. That's what I call the classical setup, because it has a very, very high chance of working out. So nothing like that happened. It did give me an alert that the trend line is broken, and as we can already see, it is going back inside the trend line. So either this break was false or the whole count is possibly wrong, right? And as I've been saying for so many last webinars, that this counter is very unclear, and I'm not very particularly interested in trading on it, on this counter, right? So that's another reason why I did not pay much attention to the entry. So with that discussion out of the way, what's happening here is we still need to wait. What I can do is place an alert again below the channel, right? And I will look for possible trades again once the market goes below this channel, right? Nothing fancy, nothing new. So there is actually not much to add here on this counter. We already know the movement. It is already labeled here, and because we are less interested in it, I don't want to discuss it in much detail. However, if you want to discuss some specific thing about it, you can just let me know in the comments. Otherwise, we are moving to the next chart, which is EURJPY. Thank you, Fraser and Philippe Calphone, for the confirmation. Hopefully, the others are also able to understand everything, and I would appreciate much more participation, or any more participation you can get. So, anyways, let's head over to Euro against the Japanese yen. It is sort of doing things that we were expecting already, although a little bit of update might be needed here. So let me just tell you what we really mean. So see, the first things first, let me remove it, and let me remove that as well, although it is still a diagonal, or maybe it's not. Okay, so anyways, long story short, this actually is a long trade here. I would not mind taking some entry or some partial entry here, because this position might require some management. It is not a clear or straightforward setup here. It is possible that we might have to add more longs later on. So first thing is, if you are entering with 10 lots, in this particular case, you will enter with around 1 or 2 lots, and then look to add on the remaining positions later on. So it's not a simple straightforward trade. But let me just give you the first of all the context of the whole situation. So the context is that in EURJPY, from this point of reference around 148.416, we seemingly have a diagonal, and it should seemingly give us a B, C correction, right? So this A, B, C correction, we were first expecting that will complete within this white box, and it did give us the impression that it has completed, because it actually reversed from this particular level. Right, so if somebody was really fast and scalping, they would have gotten some trades, which actually I think some of you guys did actually get. I remember that somebody was talking that they had taken some shorts in the chat, right? But anyways, they ultimately worked out only for scalping or short-term trades, did not work out for the swing. So what's really happening with the swing is that this leg is still continuing for the wave C up. Now, technically speaking, and practically also, this wave C up can go as high as 99.9% of this whole move. So basically, it can go very near to this level, which is the last high or the point of reference, right? So would hello Philippe back. Good morning to you. So with that in mind, let's see what the Elliott Wave counts are suggesting. First of all, as I do say so many times, multiple possibilities are possible, or multiple scenarios are possible. But what we think over here in this particular case is the fact that this market, one second, yeah. So the fact that this market is going like a diagonal cannot be ignored. right? And as I said, this is just one of the many counts. So we will just push it there first and see what it's telling us. So if this market is going up as a diagonal, then ignore everything. Just focus from this point of reference around 139.582. The diagonal would suggest that whenever the 4 is complete, which by the way can be a continuing sideways as well, but let's just assume that it's over here. In that case, the fifth should be incoming and the fifth should take out the last high. That is exactly why I was saying that this is a short-term long opportunity, but this is like a scalp kind of opportunity, not a swing trade, and hence the position sizing will be different than your regular trades. But long story short is the first idea is from this look is that maybe this is a diagonal and can go up, right? However, what I am sensing is if I remove all the counts, I am sensing that there is some possibly unfinished business for this wave for if this is a diagonal. Maybe this is going to continue sideways, maybe a flat or something else, complex pattern or something, and it might go a little bit sideways, right, and then go up for the fifth wave. But in either case, as I just said, it should take out the last recent high, which is the price level of 145.457. Now, if you consider both of these scenarios which I just discussed, and the opportunity seems to be disappearing as we talk. But yes, as I was saying, I already have a pretty huge position on EURCAD, so I don't really want to take another opportunity right now. Although that trade is secured, it's a free trade because the trailing stop loss is above the entry, but I still don't want to add more. Maybe I will add after this webinar when I have more time to think silently. So as I was saying, if we decide to take this trade, partial entries can be taken here, and in case this market does that sideways thing, then more partial entries can be taken here. You can keep in mind if the market still just goes straight up from here, takes out the last high, then that's the end of the trade. In scalps, we don't really consider the possibilities that what if it goes there and comes down for 4 and then goes up again, because those things are going to increase our risk profile a lot. Long story short, you already got the idea of how to play this counter, and there is nothing much to add other than the fact that if this market goes below, let's say, from what I can see, if it goes below 143.219, then most likely this is doing something other than what we are discussing right now. So an update or what do you call a completely new count might be required at that point in time. So with that, I would say EURJPY, we have covered all the major important points. Let me know if there's anything specific you would like to ask. And by the way, just do keep in mind that we have already discussed this kind of movement, upward leg up and more upside in our last webinar. So we can count it as a +1 for our what do you call trade counts purposes, but I'll just leave it and we will look at it in the next webinar and we can count it at that time because still more upside is remaining. Thank you, Fraser and Jill and Charles, for the confirmation. And let's now head over to our next chart, which is crude oil or WTI West Texas Intermediate Crude. Thanks, Philip Calphone. Damn, S&P really did make the move. Well, that's going for a trade now. Anyways, my alert should get triggered, but let's just quickly go over CL and follow our regular routine. If a trade is triggered, I'll get the notification and I'll just push the position or push the trade. So CL, I'll just quickly conclude here because the situation is more or less the same. We still don't have anything new to add here, and just for no new participants here, just quickly telling you guys that We expect possible triangle. If the triangle is there, we want to see a move below 72.40. If there's a move below 72.40, we will look to sell this counter. If there is no move below 72.40 and the market without moving lower than that level takes out the high around 80.12, then we will look to add possible longs above 80.12. So 80.12 and 72.40. Just keep those levels in mind. And other than that, this market has given us no clear opportunities since a long time. So preparing for something possibly. And I'll just not add anything to it because it's sort of not much useful. So let's now quickly move over to gold, right? Okay, so on the counter of gold, last time when we were doing the webinar, I had a position here and the position was short. And the reason for the short position was that I was expecting that this market was giving a wave 1 here and a flat kind of structure for the wave 2 here. Now, technically, that position is still all right because the count is still valid, but I personally exited the position quite some time back, right? Sorry, I missed a comment here. Crude oil can be bearish, just an upward correction in play. We need a breakout to confirm it. Very true, Antoine. The triangle breakout would be or could be significant, I should say. In my particular view, I think the triangle is looking quite clear, and we should be on the lookout for it. Okay, so guys, getting back to our current discussion on gold, what I was saying was that this flat correction is still valid. A up, B down, and 1, 2, 3, 4, 5 up for C, right? But I have exited it because I think I exited it right alongside my Euro USD trade. Both of them seem to not be working out, so I exited them both and shifted my positions to S&P. But leaving why I shifted when I shifted aside and talking about the current scenario, as I said, the count is still valid, right? If this is really A up, B down, and C up, then first thing we can do is we can wait for this market to move at least lower than 1830. So below 1830, you can say that we have a slightly risky, but our first entry. First entry means you can enter partial if you are going for the risky trade, right? Because there won't be much of a confirmation here for the shorts and take the last high as a stop loss. So 1830 is the important level right now. And secondly, if this market goes higher than 1846, then I personally will start looking for recount and possible long trading opportunities. Not confirmation of longs by any means, but just possible long opportunities, right? So long story short is if you are looking for shorts, we will only start doing that below 1830, right? And secondly, if you are someone very conservative and want to have a clear outlook before taking the entries, then the clear outlook you can look for below 18 to 1814-ish level. Somewhere within this range, if the market comes, then we can start looking for what you call BD setups. Right? I personally have placed the alert much above it, but the alert does not mean a trade. So no real, not much importance, I should say. So I think I have discussed the main point here, and counts we have already discussed them in the last webinar. We are thinking possible nested 1 2 1 2, right? So if you have any particular questions, you can post them. Otherwise, if you are just interested in checking out this count, you can check out the last webinar. I think we have discussed it in much detail. And for those of you again who are not much familiar with how we conduct things, just visit my YouTube page, click on live section here. And this is the current webinar, as you can see live written over here. So this is the last webinar number 43. You can just click on it and select the timestamp, because all these webinars I put out the timestamps of where I discussed what. And the channel name is 50 Eyes Market Analysis. Handle is @ of 50 EYES. Let me see the comments now. Okay, Philip is saying gold same idea, then Euro USD and clear, and Charles is saying clear, and Philip Pack is saying clear. Fraser, thank you guys for the confirmation, and thank you Jill for the confirmation. Now let's head over to what is the next chart. S&P, of course. S&P, very interesting. I had this idea, as you can see, I have already marked it. I just missed this second entries here. Let me tell you what I'm doing here. And by the way, I was able to take some successful longs on this counter, which were counter trend, of course, during today's session. Around afternoon European time, I would say. So let's just see things for what they are right now. First of all, let me give you a quick rundown of the trade I was in. By the way, why don't you guys tell me if you are interested in letting me tell you what the entries I was taking? In the comment section, you can just let me know you are interested in the trades, and if I see 3-4 comments, then I'll discuss the trade. Otherwise, let's just first discuss the count we have currently on screen. So the count we have currently on screen is, by the way, it is following our counts precisely. And since I was already able to predict the movement for the wave 5 down, I'll just add +1, making our tally to 49 trades in the last 43 webinars. 49 in the last 43. That's quite a good number. So Fraser is saying interested. Philip Pack is saying yes, show the trade, and Philip Calphon is saying yes, interested. So let me just first start off with the trade, and let me see the history here. Or I can just open the chart. No need to share this. Check the history. Go to 15. 5 minutes should be all right. Okay. So the trade entry is at 3964 something level. Let me just push it on 5 minute and compare it where it is at. There it is. So this is our entry. And exit is at this level. So kind of a very quick scalp kind of a trade. I was able to capture the movement from 3972 to 3979-ish level. Actually, very much near 3979 level. Very quick 4-5 points. 72, 79. Around 6-7 points roughly speaking. But I entered with huge positions and exited as soon as I can, right? And let's just quickly check the reason for entry. That will obviously become clear with the counts. So the reason for entry is, it comes on the 15-minute chart much clearly. So by the way, the reason for entry was already discussed in the last webinar. So I'm just reiterating for the new participants. From this point of reference around the price level of 3942-ish level, we have the upward movement, which is what we will call the wave 4. Now the wave 4 could have completed here. That would lead to a downward fall, right? Or even if the wave 4 is continuing sideways, that will again lead to the downward fall. And that is exactly the setup we discussed in the last webinar. That's why I did +1 for this counter, right? Now, however, it is worth noting that both setups are downward, sideways, then down or down. Then why I was long? Well, I was long because I was thinking that this market is possibly going as a possible either complex or a triangle kind of correction. And if it was a triangle, this would have been the wave A of the triangle, and this would have been the wave B of the triangle, and this would have been the wave C of the triangle heading up, right? Now it could still be considered the C of the triangle, although with a little bit doubt at my end. Now the more important thing is, what is this market doing right now, right? And yeah, just quickly iterating Why or how I was able to capture this is because I had the 0 to B trend line, right, from A, and because this trend line, let me just do one thing. Let me just make it the capital A for the triangle with the circle, make it the capital B of the triangle with circle. See that yes, this market has completed the low here, right? And based on that, I was interested in longs, and that is the moment I was able to capture somewhere here to here, right? Of course, the market kept going higher, but I think my exit was pretty well timed, because right after my exit, the whole movement has been just sideways and very unclear. So I think I would have exited afterwards anyways, maybe with a little bit more profit, but oh well, this is quite enough. And 1 second, I'm just closing, just closed. So I've closed my EURCAD positions. I will look for re-entries. It's sometimes important to book the profits from time to time, because after all, if the continuation of the movement is still there, you can always re-enter the trade. Anyways, the longs are still active. I have just exited because I will look to see if the correction gets completed, and if it does, then we will of course enter again. Right, anywho's, coming back to our S&P 500 count. Now the A down, B up and C down is still valid. What is it doing now? Let me just tell you very quickly that it is possible that this is the C, this is the D of the triangle, and the E of the triangle. Now keep in mind, the triangle is a structure which has 5 waves. They are called A, B, C, D, E. And if I were to draw a rough triangle, then this will be your A, this will be your B, C, D, and E, right? And if you draw trend lines, they should look something like this, converging at a further point and resembling a triangle. That's why it's called a triangle, of course. Now, with that out of the way, it is possible that it's going up for a E, and it is also possible that it goes up a little bit more, right? Both possibilities are there, right? Because as I said, this whole region, the market can just go sideways and form maybe a complex, maybe a flat or whatnot, right? Complex is also possible, flat is also possible. That means this whole range, the market can keep moving and doing different things. So we do not really know if this market will just go a little bit up and then fall, or maybe it will go a little bit more up and then fall. That all remains to be seen. But what is clear is that if this market goes lower than this low, or the recent low, which is around 3951-ish level, then I definitely am interested in selling this counter or looking for short opportunities. So below 3951, why I'm interested is because it may have at that point completed the triangle here. And if the triangle is, let's say, completed, or even if the triangle is not completed, the possibility that this was the wave 4 is still there, right? And then this could be taken as a nested 1-to-1-2 formations. I believe you already get the idea. So long story short, below 3951 levels, I personally will be interested in some sell-off. And other than that, this market can do way too many things. So other than that, for long setups, it's more or less a wait and watch. But most important thing is this structure definitely has what do you call, some trade potential. Not some, many trade potentials. Maybe we'll get multiple opportunities on this counter. So definitely keep that in your watch list, and let me know if you have any doubts, questions, comments in the comment section. Anton has already commented, can you draw fastly the Elliott Wave count on 1H or 2H time frame for SPX to have larger view? I think we have discussed it in much detail on some other webinar. Probably I should have taken a clip out of it. Let's see. It should be enough. Where is it? There it is. There it is. There it is. So yeah, what we have here is, from this point, we have the wave 1 here, 2 here, and then the next 1, 2, and 3, and 4, and then there will be a 5. So there it is without all the clutter. This is your longer time frame count, still suggesting more bearishness to follow. So one thing I can add here is, from a swing perspective, this is still a sell short. Okay. but we try to capitalize or make as much profits as possible. So maybe intraday as well, we can do something here. And swing wise, it's already a short. What about the other guys? Okay, so Antoine is saying thanks, very kind, you got it. Welcome, Antoine. Jill is saying great analysis. Thanks. You're welcome, Jill. Hopefully, others are also able to understand whatever we're discussing. And thank you, Philip Peck, for the confirmation. And Charles Lerox, perfect. Thanks. Fraser is saying thanks. Okay, guys. So now let's head over to our last two charts, Nifty, which will be followed by BTC. And before I do that, make sure you have hit the like button on the YouTube page, or if you are viewing it on another platform, then they also have like or something similar to the like button. So make sure you hit that so that the YouTube algorithm knows that this content was useful to so many people, and it pushes our content. And of course, I'd like to request you guys here again to share my content as much as possible. As one of our dear subscribers, Stock Hero, who is actually Charles Flowers, was telling me that he is sharing my content regularly in the multiple groups that he has. So if you also are a member of some trading group, Slack, Discord, or Telegram, or whatever you guys are using, make sure you share it. And also, one of you guys had messaged me privately that I should make a group and put a charge for it. So I am not sure what your views are. For those of you who are attending, you can let me know if you would be interested in something like that. Currently, I already have a group. It's a Slack group, but it's reserved for the students of my personal classes. So it's more focused on teaching kind of stuff, and I have kept it that way. But if you guys are interested in more updates, or obviously more updates of the counts we discuss in live sessions, then please do let me know here or via email or in one way or another. Actually, just let me know here if you guys are interested in something like that, right? And we will see what we can consider. Stock is saying I would be interested in a group, and then saying yes, should create a Discord group to grow your community as a lot of US analysts do. Okay. So he's saying Charles, yes, please. The only problem I was facing is I was thinking of making the group free, but then there will be the issue that people will always look for regular updates, and regular updates cannot be done free. So that's why I asked you guys about the paid thing. Okay, so I'll probably ask again after 2-3 webinars when I have formed a little bit better idea of how to do things. But if you guys have some ideas, make sure you share it, because I personally have never created a group for just sharing the analysis. The groups have always been sharing analysis, but only with the students. So if you have better ideas of what new things you might need or are being done by others, please let me know. You can always contact me, by the way, from my website using the About Us page. There it is. Just visit my website, and at the top you will see the About Us page. I'm very much looking forward to some ideas on how to make things work. And while we talk, S&P seemingly is already sort of forming a possible triangle thing. So I will just quickly adjust my alert here. I have seemed to have gotten some comments here. Stock is saying save the other group. It's going to take 11 more months for me to get that money together. So you are, I think, talking about joining the classes, right? If I'm not mistaken. Anton is saying YouTube is just secondary support for community. YouTube is just a secondary support for community. I got your point that I should be more active in the group, and YouTube is just one thing that I do on the side. I think that's what you are saying. The issue is that currently I'm doing or completely doing YouTube only, is that we want to get more audience first, which after 43 webinars should have been the case, right? Just for the class. Okay, that's good to know that I have students already interested in the classes. So now let's get over to the analysis. And by the way, guys, thank you for the feedback regarding the groups. Right, I'll probably get a better picture from you when one of you has sent me a clearer picture in private messages. If you have a detailed structure or anything, everything is welcomed actually. So now let's head over to our next chart, Nifty 50, which has done some very weird things in the past few sessions, right? And I have taken some loss on this counter in the past few sessions. Now, first weird thing, or not weird, I will say out of the ordinary thing that I'll show you is that it, again, by the way, it's not for this chart. It is for every chart that you know of an index. This is weird compared, because see, if you see something weird on an index, what the hell is that? Let me refresh it. If you see something weird on an index, then it is something you should keep as a case study. And the reason being that I had clicked percentage by mistake. And the reason being that something weird on an index is always noted by everybody, right? All the hedge funds in US, they might have some exposure to Indian markets or not. And if they have exposure to Indian markets, they are always looking out on the actual index itself, right? So an index doing something weird is keep it, note the date even, like I do with my private Discord channel, as you can see over here. I don't want to disclose my private research, so I just showed it quickly. So anyways, coming back, this is the point to be noted here. Start counting from here. 3, 4, 5, 6, 7, 8, 9. 9 red candles, right? Every candle has gone below the low of the last red candle. Every single candle has gone below the low of the last red candle. Now, in Nifty itself, I do not think I've seen it in the last 1 year. I tried to check it roughly or fast for the last 2 years. I could not find any single movement like this. 9 red candles consecutively, every single one below the last low. Now keep in mind, below the last low movement is important here, because you might find red candles continuing inside this range, right? Like maybe 3-4 red candles within this price range. That is not that significant, right? Sideways movement may have been a flat, may have been a triangle, complex, whatnot. So not that significant. But this is a trend continuing for 9 days. Every consecutive leg lower than the last leg. Every consecutive leg lower than the last leg. So even if you go to the S&P chart or RTSI, the Russian index chart, there is a very low chance you will find something like this happening multiple times. Maybe in the last 3-4 years, 1 or 2 times. So this is a rare kind of thing and something to be kept a note of, right? Now, so what is the significance of this? The significance is multifaceted, as is everything with the Elliott waves. We have two counts here. We had counted it like a nested 1 2 1 2, right? I'm not going to correct this because 1 2 1 2s can again be counted in multiple ways. So you get the idea. This could be a dot 1, this could be a dot 2, and as I was saying in the past, last to last webinar, I think that this could be a dot 3 here, right? By the way, if any one of you has noted something like this in any of the indexes or the major commodities, let me know on what commodity and around what date, if you remember it, or at least just the name of the commodity or the index. Because I would like to study what happened afterwards and so on and so forth. Makes a good case study and obviously will help me trading this current scenario as well. So anyways, I also checked my own personal records of research, which I have for 6-7 years something. I did not have anything like this written out. So anyways, long story short, this possibility is still valid and it is still strong, right? Now, this is the most or extreme bearish scenario, but you have to remember that there was another scenario which I pointed out, which was basically saying that once this market takes out this low of the price level of 17,339, then this particular leg down can be considered as completely over and this market can then resume the upward trend, right? So now that this market has done exactly that, it has just gone lower than this low by one close on the daily basis and has given us a good green candle. It is definitely possible that this market has gone down and completed the whole darn thing, right? Now, if it has done that, then it should reflect in the prices very soon. But I'm not going to go swing long on it for the very simple reason. First, the odd movement or the very rare movement of extreme bearishness. And the second thing, the bearish scenario of the nested 1-2-1-2 suggesting that there is a 3 incoming is still on play and nothing relegating it at all. Now see, so since both cases are possible, we can count it as a WXYXZ, and we can say that yes, the whole leg is complete already, and where is it? 1 second, WXYXZ. Yeah, so it is, as you can see, already touching the trend line as well and reversing here. So another price action kind of reason, but I'm not interested in this minor trend lines and stuff. They get broken very fast if the trend is bearish. Now this is an interesting point. So 1 second, I'll just get a quick sip of water. In the meantime, let me know if you want me to discuss this interesting point on this daily chart, or we can just conclude this discussion with the unclear situation that this move is unclear, and just let me know if you want me to discuss the interesting point that will happen or can happen. Okay, so thank you guys for letting me know your interest. Suhas, Jill, and Charles Flowers, and Philip Peck, and Charles Lerox. Okay, so the interesting point that I observed over the years is that when an extremely bearish move is about to come, the market participants will not give you a chance to enter intraday. Now, I have observed it so many times like clockwork. I remember one time I captured an extremely huge move in copper. Not I caught the move, I caught the turning point, exactly the turning point in copper. Like it was on a daily chart and the movement was, let's say, even bigger than this. So on that copper chart, I was seeing and I was thinking that, yeah, this is the exact turning point and the exact pinpoint movement I had caught. But then I was thinking to myself, let's wait for the confirmation. And in the next session, I will look to enter the shorts. What happened in the next session was the movement was so fast, so fast. You can even call it sort of a gap down because in seconds, the market fell. It fell to monumental levels or very fast, not monumental levels, and I was not able to take the entry. And what happens in these scenarios is if you are not able to take the entry near the pinpoint which you have already identified, you sort of lose a little bit of confidence, and then you tend to enter either very small positions or not at all. The fact is different in reality. Even if I had entered later on, because let's say if the market in copper dropped this much, even if I entered later on here, I would have been able to capture this much movement. But in practicality or in real life, the thing is nobody knows if this much movement is still going to come, right? Who knows? Maybe this was the only movement that was going to come. So what I'm really saying is, long story short, is I knew that the movement was incoming, and they did not let me have a clear opportunity to enter it. So what will they do in the scenario like this is, if the movement is still bearish, as we discussed about the wave 3 continuing down, they will make it open gap down below this channel, right? Uh, how about even lower than this channel, like somewhere here? The candle will look something like this. And believe me, it has happened so many times like clockwork that I won't even be surprised. I definitely will be a little bit like thinking like what kind of thing I have done by not entering shorts. But that's the way it is. Sometimes you know these things and you have to let them go. For instance, let me tell you that I had this in mind that this market will do something like this. And I was holding my shorts, holding my shorts. Would you believe that I was short even on the ninth session? Generally, these movements don't last more than 6 or 7 sessions at max. On the seventh session, you will see a green candle. I had shorts on ninth session and I was a little bit greedy. I wanted it to fall and I held it for today's session as well, where I had to book a big loss, right? So I already tried. They have refused this movement for one session, but as I said, it is possible on the next session they might do it, right? But as I said, you have to manage the risk as well. So I tried with the amount of risk I could take, and I had to consider a temporary defeat. But I may have lost a battle, but I am not conceding the war, right? If I see another opportunity, I'll enter it. So just keep this point in mind. Major movements will generally not give you a entry. Even if you see the movement, you will not be possibly able to enter it. So how was it? Did you find it of any use or interest? Or was I just boring you guys? Let me know in the comments before we head over to our last chart. Fraser is saying interesting. Jill is saying, can we mark the other scenario? Possibly Suhas Patel is saying, as was actually there are multiple ways you can count a nested 1 2 1 2 3 down. But long story short was that there is a 1 and there is a 2 here, and we are expecting a third of the third incoming. Yeah, one more thing here very quickly. A third of the third will generally almost always have a gap down in indexes. So if our count is correct, it is kind of aligning with the super BD scenario I'm suggesting, where the market will, wherever that trend line was. I think this trend line was the one we were using. Yeah. So it kind of aligns with our view. As I was saying, the market participant will not allow you a clear entry, and there will be a gap down if this is a third of the third, and also third of the thirds will have a gap down. You guys already know it, right? It's kind of a very prominent thing. So it kind of fits with all those scenarios. Anyways, I'm just going to go intraday for now, and let's head over to our last chart now. Where is that? BTC. So BTC, as we were discussing last time, there is nothing really that has changed. So I was telling you guys last time that we expect that this market is possibly forming a fifth leg up. If it is doing that, then it can go to this red trend line, which currently suggests a price level around 28,000 or higher, 28,400 or higher actually. Right, so it can go to 28,100 to 28,400. What I'm really doing is I'm just taking the crosshair from the current price and just matching it with the price. So as you can see, it's currently around 28,160 something. So you get the point. If it goes up, it can go like this. So 28,200, 400, whatever, 29,200, whatever. Long story short, we already were able to capture this leg up. So if your entry was all right, you could still hold it above your entry, trail your stop losses. And for new participants, I don't think there's any entry right now. We will have to wait till 24,970-ish level, basically somewhere near this high. If the market comes, then yes, we will be looking for longs again. But before that we are not looking for long entry here. Right? S&P is less than something, so what I'll do is I'll just quickly add some shorts here. No, actually not. That means the alert was a little bit above. I'll have to readjust the alert. I'll do it after the webinar, but it looks like it might give us a short trade. So I have opened it simultaneously on the next screen. So yeah, as I was seeing, it is still looking for upward movement. Just trail it, nothing new to add. And if you have any other doubts, you can just type in the comment section. Actually, I'll just add the shorts. Partial entries. So we have taken partial shorts. Let me just double up on it. Looks to be working out. Let me increase the position size. Okay, guys. So I think we are done with our discussions here. And I'll see you in the next webinar on Friday. Thank you for joining in, and make sure you share the content with your friends, colleagues, and that's about it. I'll just sign out now and take care of the entries I have just taken. You're welcome, Fraser, Charles Flowers, Philip Pack, Charles Lerock, Philip Calphon, everybody. Thanks for joining in. See you next time. Bye.